Welcome to The Explainer. All right, today we are diving headfirst into the high-stakes, high-speed world of day trading. We're going to cut right through the noise and show you what it really takes to make it in this incredibly challenging field. You've seen the hype online, right? All the Lamborghinis and fancy lifestyles. Well, let's get real for a second, because there's a huge difference between that stuff and the disciplined reality of professional trading. Our job here is to separate the facts from that whole get-rich-quick fantasy. All right, first things first, what is day trading, really? And what makes it so different from the long-term investing that most of us are familiar with? So, the name pretty much says it all. Unlike traditional investors who might hold on to a stock for years, day traders are in and out fast. We're talking within hours, minutes, sometimes even seconds. They almost never hold a position overnight. The whole game is to try and capture profit from the market's tiny little daily waves. And that difference in the time horizon, well, it changes everything. A long-term investor, you're digging into a company's fundamental value. But day traders, they live and breathe technical analysis. It's all about reading charts, finding patterns, and trying to predict those immediate price moves.
I mean, it's easy to see the appeal, right? You've got the potential for high returns, the flexibility to work from literally anywhere, and the independence of being your own boss. It's a really powerful mix of financial opportunity and personal freedom. No wonder it's so alluring.
Okay, but here's the other side of that coin, and you have to pay attention to this. The potential for loss is just as high, if not higher. The stress is intense. Markets can be wildly volatile, and success, it demands a level of discipline that, frankly, very few people actually possess. So understanding these risks, that's step one, period. So, okay, let's say you've heard all that, you've weighed the risks, and you're still curious. What are the absolute essential tools you need to even step into this arena? Think of your broker as your gateway, your partner in the market. This is a huge first decision. Of course, you need a platform with low fees, because those costs will eat you alive with frequent trading. But just as important, maybe even more so, is lightning-fast execution and really powerful charting tools. I'm not kidding, a split-second delay can literally be the difference between a profit and a loss. Getting set up is actually pretty straightforward. But let's hit pause on step 3 for a second. That part about using a demo account, paper trading, that is not just a friendly suggestion. It is absolutely 100% non-negotiable for any beginner. This is your sandbox. It's where you test your strategies and make all your mistakes without paying for them with real, hard-earned cash. And day traders aren't just stuck with stocks. They operate across a ton of different markets. You've got the global currency markets, also known as Forex. You've got the super volatile world of cryptocurrencies. And then there's even more complex stuff like options and futures. The key thing to remember is that each one of these has its own unique personality, its own risks, and its own opportunities. All right, let's shift gears and talk about strategy. Because you cannot, I repeat, cannot just dive into the markets without a plan. You absolutely need a precise game plan for every single move. So a strategy is not just some good idea. It's your personal rulebook. It's specifically designed to take your emotions completely out of the equation. This rulebook tells you exactly when to get in, when to take your profits, and this is the most important part, when to cut your losses. It's the logical foundation for every single decision you're going to make. Look, there are a million strategies out there, but most of them fall into a few broad categories like these. It doesn't matter if you're riding a strong trend with momentum trading, or you're a scalper making dozens, even hundreds of tiny little trades. The goal is always the same. Find a predictable, repeatable pattern in the market, and then you exploit it. And this brings up a core rule of trading. It's so important. Amateurs, they just focus on when to get in. But professionals, they are obsessed with when to get out. They know their exit points, both for a win and for a loss, before they even click the buy button. Which brings us to what might be the most important topic of all. Seriously, this is what separates the vast majority who fail from the tiny few who succeed. And that is mastering risk and mastering your own mind. Believe me when I say this, the market is a psychological battlefield. Your biggest, most dangerous opponent, it's not some other trader, it's not a giant hedge fund. Nope, it's the person staring back at you in the mirror. It's your own psychology.
Think about it. Does any of this sound familiar? You've got fear, which makes you sell a winning trade way too early. Then there's greed, which can turn a great winner into a horrible loser. Oh, and FOMO, the fear of missing out. That makes you jump into a trade way too late. And the worst one, revenge trading. Trying to win back money after a loss, that is the fastest way to completely blow up your account. These emotional traps, this is exactly why that rulebook we talked about is so dang important.
So, what's your best defense against all this? It's the stop loss order. It's simple, really. It's an automated order that kicks you out of a losing trade at a price you decided on before your emotions got involved. Let me be crystal clear. A stop loss is not optional. It is the single most important tool you have for protecting your capital. Full stop. And here's a really simple but incredibly powerful rule that so many pros live by. It's the 1 to 2% rule. Never, ever risk more than 1 to 2% of your total trading capital on any single trade. So let's say you have a $10,000 account. That means you're risking, at most, $100 to $200 per trade. What this does is it ensures that even a nasty string of losses won't wipe you out. It lets you live to trade another day.
This right here is the ultimate mindset shift. You have to stop thinking of yourself as a profit seeker. Instead, you need to start thinking of yourself as a professional risk manager. Your number one job isn't to make money, it's to protect the money you already have. Profits, they're just the happy byproduct of excellent risk management. Okay, so let's put it all together. How do you actually build a sustainable career out of this? Well, it's definitely not about hitting some lottery ticket. It's about running a marathon of discipline and constant, continuous improvement. And listen, there are no shortcuts here. The path to becoming consistent follows a really clear process. It always starts with education. Then it moves to tons and tons of practice in a demo account. And only then, once you're profitable there, do you even think about trading small amounts of real money. The absolute key is that feedback loop, reviewing every single trade in a journal so you can learn, and only scaling up your size when you've proven you're ready. This is what it comes down to. Professionals treat trading like a business, not a hobby, not a casino. They have a written plan, they keep meticulous records, and they focus on executing their process flawlessly, not just on the profits. They know, deep down, that if the process is right, the profits will eventually follow. And they're committed to learning forever. And that's really the bottom line, isn't it? The plan itself is simple. The concepts we've talked about today, they're pretty easy to understand. But the execution, that's the hard part. Executing that plan flawlessly day in and day out when real money is on the line, that requires an immense amount of discipline. So the final question you should be asking yourself isn't, can I learn this? The real question is, do I have the discipline to actually do this?